Hello Sector Watchers, welcome to the show. This is the 75th episode of Sector Spotlight for Tuesday the 13th of April, recording on Monday the 12th. My name is Julius de Kempenaer and I'm hosting the show as usual from Amsterdam in the Netherlands. If you want to stay in touch, have anything to say, would like to share your opinions, your views, your strategies, whatever, as long as it's related to relative strength and investing in general, please use any of the handles on the screen. My email address is available, so you should be able to reach me wherever you are. 75th episode. What are we going to do? We're gonna look at the at last week's rotations as usual, and then I want to go over the long-short baskets. It's been a while that we run over the positions, see if what's in the basket is still valid, and maybe we need to make some adjustments. We'll see about that. I have one question from the mailbag that I would like to discuss or bring to the show, and let's see what else comes up. As usual, we will start with a quick overview of rotations that happened last week in asset classes and sectors. On the left side of the screen, we have the set of asset classes that we are tracking here in Sector Spotlight. And the benchmark is VBINX, which is a 60-40 stock bond index. And the reason I'm expressly saying this is because I got a message from someone who expressed their concern that I was using a not so well-known index, and newer viewers, watchers, were potentially not aware of what it is. And you know what? He's right. The only problem is that I have done it so often that I feel almost burdened to actually explain time and time again which index I'm using, which benchmark I'm using, because I feel like I'm talking to the same group of people every week. And you know, so sort of underestimating you guys if I explain what is on the screen every time. So please understand that when I do that, that is not personal, as I'm not underestimating you, because there are people who have not seen Sector Spotlight previously and they do not know what VBINX is, and they may not know what sort of things is. So I will try to bring it back maybe more often, but another thing that I'm considering doing is creating either a special Sector Spotlight or an article which holds maybe not necessarily an FAQ, but like a dictionary, maybe a dictionary of jargon that we're using around RRG and Sector Spotlight. It's brewing in my head. I need to think about it. Let's have a look at the rotation of asset classes. If we look at the table, it was a good week for the stock market, up 2.4%. Pretty much the only asset class that was beating VBINX this week. VBINX up 1.5%, and then everything else was lower. Commodities, the DJP one was up 30 bips, GSG down 50 bips. And then the rest, a lot of it is unchanged, like 0.2 for real estate, and then 0.1 for pretty much all fixed income stuff. And the dollar lost some ground with a loss of 80 basis points. Because we're doing a lot of other stuff this week in the show, I want to jump directly to the weekly version of asset classes and pick out a few of the longer term rotations. We saw ITOT stock market doing well, the rotation here. As you know, short tail means a very stable trend, and it's at the right hand side, so it's up. It's a rising relative strength versus VBINX, and that's exactly what you see here. It's a very stable rising relative trend in terms of relative strength of stocks versus VBINX. And what other? We have V and Q losing a little bit of strength there. Let's bring that up real quickly. We can see that bottoming process is continuing. I really like the fact that we're building this gradual base here. And the RRG lines are still both above 100, which is good. And we're losing a little bit. This last hick here is that little thingy that you see here expressed on the RRG chart. I think the most important thing to, well, two things. The GSG, the commodity ETF, and DJP moving along the same lines. And you see here that we're now, this is now a valid trend line. So it's got 3 touch points. I'm not extremely fond about it because I do feel that we're missing a very important high here. But 3 points that are lining up this nicely, I'm gonna draw it in and keep an eye on it anyhow. But it causes the commodity market to come under pressure a little bit, and I think that's a good thing because we've had a massive run up, and I was actually waiting for something to happen. I was waiting for some pressure because I really do think that we're in the process of building a very long-term base in commodities, and we need a little bit of a breather and, quite honestly, an opportunity to get back in or get in at a reliable level, because well, at least I don't really want to chase these extreme run-ups. So I'm waiting for this red strength line to roll over, potentially test, form a breakout level as support, and then create this rotation on the right-hand side, hopefully. But that's a little bit fantasizing into the future, so still keeping an eye on commodities. Now all the fixed income stuff here, so government bonds, high yield, corporate bonds, they're all on the left-hand side, they're all losing relative strength, so they continue their relative downtrend versus VBINX, and basically they continue to feed the stock-bond ratio. Let me see, where did I stick that? That is right here. So here is ITOT versus GOVT, and you can see that that is still a very nice uptrending channel. Basically not a lot of weakening signs ahead, so it just broke to new highs. So whatever we're going to see later on, just keep in mind stocks are still the preferred asset class over bonds. There's a couple of things going on in the sectors, but on a bigger level, stocks are on the right hand side, bonds are on the left hand side. That means you got to stick with the stock market for the time being. Now over to stocks and sectors a little bit more in depth. Starting on the right hand side here, surprise surprise, this is the daily chart of the S&P 500 of SPY, and where we had a situation, we discussed it here, where that steeper trend lost some of its momentum and started moving in a more sideways fashion. A little bit over a week ago, we broke out of that new channel on the upside and see the rally following that we are currently experiencing, and that is still there, and we're sort of running against this, and I've shaded it a little bit because it became less important after we had this new one, but it might come back into play. So that's around 415 that you may see some resistance coming in. By the way, the market has already closed, so it's 11 p.m. for me here in Amsterdam, and today the market was sort of unchanged. Today meaning Monday, not when you are seeing this. That means that the overall trend in the S&P is still intact, and that sort of coincides or confirms what we just saw in the asset classes, that stocks are still doing very well. Let's have a look at the sectors and the rotations that we saw last week. If we rank the sectors on their performance, then there were 3 sectors that were outperforming the S&P last week, and those were consumer discretionary, technology, and financials. And discretionary and technology, 2 of the biggest sectors around. Tech, 26%, discretionary, 12-13%, so that's a lot, and when these 2 rise, almost certainly the S&P must rise. But if you look under the hood, you see that 11 minus 3 is 8 other sectors actually underperformed the S&P 500, and especially energy losing 2.6%. So last week's rotation, rise of the market predominantly driven by the strong week for technology and discretionary, and a little bit less financials. financials right here inside the lagging quadrant. Now move over to the weekly RRG. Sorry, I need to switch this to weekly and see how that is going, because you know that I've been discussing here in the show. I wrote a few articles about it, about the inherent weakness that I am seeing inside the technology, discretionary and healthcare sectors. And if we look at those, then you see that that tail here for technology is rapidly moving into, or well, not rapidly, but is moving into the lagging quadrant. The tail is shortening, so there's not a lot of power behind that move, but it is moving in that southwestern direction, which is not particularly strong. And this is a good time to talk about a situation that I got mails on a regular basis. When something is in the lagging quadrant, like technology here, and people say, hey, we have this performance which is up 7.6%. How can it be that it's in the lagging quadrant? Well, the first answer is that the performance here is in an absolute sense, and what you see on the RRG is a trend in relative, is a relative trend, so that doesn't necessarily have to match. But here we have a special situation where it's actually also outperforming the S&P 500 over the last 5 weeks. But if we make this a little bit longer, then you see that it is, depending on how long you make that, is actually underperforming the S&P 500, so it's or just below it. And that is what is currently going on in my view, that the technology sector, because it's such an important sector for the S&P 500, is struggling. Here over 15 weeks we are below the S&P 500, 14 we're below, 12 weeks we're below, 10 weeks we're below, and then we jump ahead, and then the last few weeks we're doing quite okay again, okay-ish. That's why that tail is now shortening. Nevertheless, the underlying trend, and let me bring up that XLK chart here for you, then we can connect what we see on the left-hand side and on the right-hand side. It makes a little bit more sense. What we're seeing on the RRG here is that sideways move on the relative strength line for XLK versus SPY. And that has caused the RRG lines to move lower. First, just above 100, at least for the RS ratio, and since early March, both below. And that's pushing XLK into that lagging quadrant, and that's that rolling over situation that we're seeing in relative strength. Now, the break to new highs here last week obviously is a positive sign. That is not the problem. The absolute trend is not the problem. But when I look, for example, if we put on a simple indicator like the MACD, which is like an absolute oscillator, looking at price oscillator, then what you will see here is a massive divergence building up over quite some time already. And that is, in absolute sense, sort of worrisome, or a warning sign that that push to new highs may not be as strong as you would like to see it. Let me put it like that. So I'm still quite cautious, as you hopefully hear in my voice, with the technology sector, because it is inside the lagging quadrant, and discretionary is somewhat the similar rotation. You see that tail moving into the lagging quadrant. Performance still up to par, still pretty good, but under the hood things are changing, or at least so I think they're changing. You see also here for XLY pushing to new highs, but look at the relative strength situation. That is a double top that's completed, that's executed, and it is rolling over. It's a trend ending pattern. And if we would draw a MACD or whatever oscillator on the XLY chart in absolute terms, you would also see that roll over. And you see that the RRG lines are both below 100 and pushing lower. That's pushing that sector into the lagging quadrant. Now, healthcare, we've seen the same. That is actually underperforming. If we would bring that sector up, then you would see that picture pretty clearly. Did not manage to push to new highs. You see the downtrend in relative strength, and you see the rollover in RRG. So XLK, XLY, XLV is more than 50% of the S&P 500. Now, again, the general picture for the stock market is pretty good. It's strong. It's beating the bonds. But what I'm wondering is whether that relative weakness of these three important sectors will not put a little bit of pressure on the S&P 500 as a whole, because I think it will be very difficult for the market, for the S&P, to rip higher when these three important sectors, when more than 50% of market cap is relatively underperforming. Or things will need to change very, very rapidly in coming weeks and turn all these tails back up. But until then, I will keep a cautious approach, especially versus these three sectors. Now, which sector is doing really well? Let's just quickly go over them. So we've seen tech, we've seen this, we've seen staples coming up, still far on the left, but it's picking up. Real estate lost a little bit of momentum, but moving to the right. We saw that in asset classes. Utilities really weak, short tail on the left, strong underperformer, strong relative downtrend. This one, industrials, that's a sector that I think is worth our attention. If we quickly bring up that chart here, then you can see that that channel is there, and you see that it is sort of breaking above. And now if I draw that, push that resistance that a little bit lower, and you can see, this is not an exact science, where you can see that, where you hover that line, it's either above or below it. I think that it's in that region, and it looks as if it's flattening out, and the RRG lines are picking up. So for me, that's good enough, and I think that it's underscoring the relative strength of the industrial sector going forward. So that's a sector that I really like going into the next few weeks, and I believe that it will beat tech, discretionary, and healthcare, for example. So that's one really nicely moving into the leading quadrant. We will go to a quick break right now, and after that we'll have a look at the current positions in the long-short baskets and hopefully be able to answer a message from the mailbag. And welcome back. We are now quickly going to take a look at the positions that we have in the long short baskets. And because it's been a while that we looked at them, just a quick refresher of your memory. We currently have longs on eBay, EWC, EXR, IVE, Microsoft, PSCD, and WFC. And on the short side we have Adobe, Costco, ETR, IVW, MTD, PG, and XLY. Now, in order to track these portfolios, I have actually created two RRGs, one for the longs and one for the shorts, and two corresponding chart lists. So we'll quickly go over all these positions, and I'll give you a quick spoiler alert. We're going to remove one stock from each side, and we're going to add a new stock on each side to replace the ones that we're ditching. Let's do that. I think it's alphabetical. So we've got eBay here, long tail, inside leading, rolling over. Now, if we look at the chart, then this is a long position, so it was supposed to move further up. That's clearly not happening. And what we see here is that it's running into resistance, both on price and on relative strength, and the RRG lines are rolling over. So on the long side, eBay is the one that I'm going to remove from the portfolio, from the basket, because it's just not doing what I want it to do. Now, the second one, EWC Canada, short tail moving into the leading quadrant, so that's good. That trend still looks good, and if we zoom in here, then we see that it's still, the reason why we picked it up was somewhere here, and then we got confirmed when we broke out of that trading range. We're testing that previous resistance level as support now, so I'm going to give this the benefit of the doubt. So Canada remains. EXR, there's probably no doubt about it. That's a very nice move into the leading quadrant, and that is support by the backed up by the nice relative uptrend, and we see that the relative strength line is now breaking its resistance and moving higher, basically just fueling a further rise of the RRG line, so that's fine too. And then we have the value ETF, because remember we have that growth value play in this basket, and this is the value ETF IVE, and it's still doing what it needs to do. We lost a little bit of relative strength over the last few weeks. RRG lines are still fine. The tail is relatively short, but it's still moving in the right direction. So I'm gonna keep this on. So I'm gonna stay long value, and you will see short IVW on the short side in a minute. Microsoft, kind of disappointing. However, I'm gonna give it the benefit of the doubt because it's breaking to new highs, and it is an important stock in the technology sector. It's sort of, I don't know, maybe in my head it's sort of a hedgy thing. I could argue that it needs to go. But you know, Adobe was also from the technology sector, so I'm going to keep Microsoft basically benefit of the doubt. This relative strength seems to be breaking out. It's breaking to new highs. RRG lines not particularly strong. I'm going to keep a close eye, but it can stay for now. Consumer discretionary small caps. Quite disappointing from the time we went in, but the chart still looks pretty good. Performance-wise, it's not yet doing as expected, but it's very high on the RS ratio line. It's got a massive rally, and the relative strength is still strong. So I see this as a temporary setback, and I'm going to expect this tail to rotate through weakening and back into leading and do what it needs to do. And then we have WFC, Wells Fargo, our financial play. It's still far on the right hand side, that's fine. It's losing a little bit of relative strength ratio, a little bit relative strength momentum, and it's running into trouble against this price resistance. So a setback is possible, but from a little bit longer term perspective, Wells Fargo can absolutely stay in the portfolio. Now quickly move to the short side, and let me open up the short basket here, and we do these, and now we have Adobe, and Adobe is just like eBay, the first one, and I'm going to ditch it. It was expected to go down. It did a little bit, but now it's picking up and it's breaking out of this consolidation pattern. So I'm going to remove Adobe from the list. If we go to Costco, it's picking up, but this rollover in relative strength I think is still very convincing. So I'm going to see this hiccup in RS momentum as temporary, and I'm going to expect Costco to actually put in a new high somewhere, both in relative and in price, and move lower, fulfilling our expectations for a short position. If you look at ETR, then that is also, it's picking up in price, but the relative strength is still well below that previous support level. That's now going to act as resistance. So that relative sell signal was given, and I see this as a pullback, and I'm expecting this to roll over again and move further down. So I'm going to expect ETR to actually roll over inside improving and rotate back into the lagging quadrant in the next few weeks. Here is the growth. We just discussed that. That's going to stay IVW despite the break to new highs. The relative strength is rolling over. That's still very, very visible. and I believe that the rotation is still in favor of value stocks. Mettler Toledo, MTD, the most recent addition. In terms of performance, disappointing from a short perspective. It's a hiccup. You can see the relative strength is still very, very weak. This is a strong move, but it's, in terms of relative strength, we're just pulling back to that breakout level. And I'm going to give MTD a benefit of the doubt to actually move a little bit further up and then put in a new high in relative strength and start underperforming. PG picking up very strongly recently, but if you look at the relative strength line, then that sell is still there, so we're getting damaged. Our portfolio is getting damaged by this rally here, but I'm actually expecting this little up move to run out of steam very, very rapidly, and PG to roll over inside, improving, and back down to leading. And then finally, discretionary, clearly moving into the lagging quadrant. We've discussed this chart in the overview, the break to new highs not confirmed by relative strength, and the RRG lines moving lower. Now, where do we find our replacements? I'm going to look into industrials for the long side. I'm going to speed it up a little bit. The one that I actually picked here for you is WM, Waste Management. And if you look at the tail, then you can see it's inside improving and rapidly moving towards leading. And if you look at the chart, then it just broke out to new highs, which is strong. And that RS line is starting to curl back up. So maybe you don't want to chase that rally higher. If we can get it somewhere below 130, I think it's a good buy. I'm going to add it to the list anyway, but timing-wise, there is a possibility that it's going to drop back, but I think the break is consistent, it's confirmed, and it looks like we have a turnaround in relative strength on our hand as well. And then finally, we have the one that I finding in the short side is on the weakest sector, and that is utilities. And the stock that I picked out, you can see it immediately here, AWK. That is a tail that is moving rapidly into the lagging quadrant. And if we bring on the chart, then you can see here that this is rolling over in terms of relative strength, and the RRG lines are pushing lower. So I need to wrap this up really, really quickly, and that means that we are losing eBay and Adobe, and we're replacing them by WM, Waste Management, and AWK. I have no time for my mailbag question anymore. I'm going to answer that in an article. This was Sector Spotlight for this week. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. For now, please stay safe, and I hope to see you back again next week. If you've got anything to say, put it in the comments, put it on the mail, follow me on the social media channels. Thank you for watching, and I'll see you back soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.